We'll update our ranking. Good afternoon, everyone. And so we kind of had a rough start, but or an overnight. But we'll tell you we'll update this where we are on the CME. We're write this down here. The last check, we were ranked 212. So we're falling back, ranked number 212 as of Monday at noon, thereabouts. The positions we have are reflected up there, so we have it. We're using maximum leverage, only as spelled out by the CME, right? So in order to win the thing, which we don't have to do or have to compete day in and day out with others, but if we're going to to do that, then they're going to use maximum leverage, then we got to use maximum leverage. So So the leverage we have $56,000 in margin on the NQ, and we have $40,000 on the Russell. And we got off to a good start last evening, and then I had to get some shut eye. Making some excuses, I know, but I did have to get a little bit of sleep, and I didn't have any capacity to put on any kind of trading robots or anything on the CME. So I got to make a decision. Do I go flat and just protect the kitty of where we got, or do I stay long? And I was long, or do I try to get short? I didn't want to be short. I did not, because as we've shown, the daily VIX was in euphoria. The daily S&P and the NASDAQ and the Russell were all in panic, and I did not want to get my head ripped off. I opted not to get flat because I thought there was a really good chance that they would, and this is for the benefit of the folks that are maybe checking in on YouTube. I thought there was a really good chance that come 3 or 4 o'clock in the morning, they could run it. And, maybe I miss it, if I set the alarm and it's just me. And so we happen to be trading with a person from Japan. We can tell because he's trading the Nikkei. And so he got himself on these moves and did really well, and he's really set the lead. But the number one position, so I went to bed, I think we were ranked, I don't know, somewhere around 20, 25, somewhere around there. And then we fell all the way back to like 400 or 500. We really fell back, maybe even lower. And now we have recovered. We're going to try to sit on this, and so we don't have to work too hard. See if we can get some market cooperation. See if we can get the 1 hour swing machine to get in our direction. It isn't yet, and if it does, I think that we can, get the number 9 position is up just 17,000. So if we get a good market run and they're get themselves hung up, I think we could be back in the top 10 to 20, and that would be good. That'd be a hell of a recovery from last night. And we need to protect the leverage that we have. Then we need to grow that leverage a little bit, because they're going to have more leverage. Now they can only go, they can't get more than 10 contracts on any one market, but they could get them on all. We're limited to the amount of leverage that we could use, and they will use it to try to win it. So it's a little bit, it's not what we would do. It's not what we teach, and it's not what we would be doing. But it is fair to the extent that everyone's got, got the same rules. So we'll see. And if you have any questions on YouTube, we're going to let you watch, and we can watch Swing Machine do its thing. And um, now there was, there was the thought, and I did have it. I'm thinking, well, if they do, because when she was turning down last night when I was getting ready to go to bed, I'm like, and this is like early in the morning. I'm thinking, boy, if they do sell it down and I'm flat, then I could be in a better position to get a better price coming out of it. I would have been, and we talked about it with our members here, just a moment ago, that it looked like they were going to try to, bounce this thing. And so, but would have, should have, you can't play those games. We're not gonna, but we, we're just trying to use the technology that we have and what the CME has, and make the best decisions, see where we are. And then if we're in the top 10 come Friday or Thursday night, then we'll stay up and see if we can win it. That's where we be. Have fun, everyone. Any questions, let us know. Okay, we just need to stay out of our own way here. And I have punched up the NQ on the 60. It's ripping against the short. It actually went short at 9 a.m. back on the 17th, which was like Friday. So this market is really was pushed down on Friday and pushed again this morning. Great opportunity to come in and get that move. Um, we jumped a little early, and so we are where we are. I want to see that 60-minute get long, and then we're going to ride that sucker. And same thing with that Russell. Now, the Russell's yet to really catch. That'll tell us that that we really got something. If they can get an appetite to come back into that Russell, reclaim 1700, and maybe we run 100 points. That would be a beautiful thing. So we're going to resist over trading right now. We got plenty of firepower on, and it looks like the ones that as far as the CME, you can kind of tell they punch up a number and then they sit and catch their breath and see who gets close to them, and but we'll see where we are at the end of the day. If you have any questions on what it is we're doing, and again, we just mentioned on YouTube, as far as the CME, it's a fair fight because everyone's at the same level of margin, same markets, same hours. It's the same. But there is, maybe they should think about this, but they allow maximum, well, they limit the margin by limiting the account and limiting the number of contracts, but it encourages risk taking. It encourages using maximum margin. So it doesn't really encourage, responsible trading here. It's still got to be a good trader to get it, but it doesn't really teach responsible. But, it's their rules, and we're choosing to play, and we'll see how we turn out. If anybody has any questions on what it is you're seeing, what it is we're doing, don't hesitate. This is a simulated account right now. We're trying to show you how we're positioned in the CME challenge. We're having to trade through the CME, and they got a week-long challenge started last night. We'll run through Friday at 1. There are 3,600 traders, or at least 3,600 people who have registered. And the top 3 get a prize, get a little cash, get some bragging rights. We're out to try to win it. We had a, maybe a little strategic error of sorts. I had a pebble in my shoe. The drill. I woulda, coulda, shoulda. But we've straightened out the ship, and the downside for us is, or the challenge is, that we can't mechanize any of the robotic size, any of the trades on the CME, because we don't have an API for that. I don't know if someone else has done that. So we got to put them in by hand. It's a little clunky. You got to do it a couple of times, so it's not conducive to very quick trading. So we're trying to get on the right side. We got a little early and got caught overnight. The person who jumped out in front is from Japan. We can tell because he was trading the Nikkei. He's probably sleeping right now, which is a good thing. We're going to catch him. We got a long ways to go, but we don't have that far to go. The number 9 position, I think, is up about 17, 18,000. And so we're up. Actually, our trades in the CME got about $1,000 jump on this. We put those in first, so we're at about $5,000 in position at 3,600. When we started at noon, I think we were around 200, 212. But it's going to be a long week, and trying to get ourselves in position. So that's what we're up to, and we're using Swing Machine. We're using the trade tracer. We're using custom Rinko. We're using point and figure, and we're prepared to start getting really active, but probably not today. No. Are you trading as you normally would, Ben? And are you taking more risk? Yeah, no question. No, I'm not. No, yeah, I'm taking a lot more risk. Yeah, absolutely. Ben is asking, are you trading normally, or are you taking more risk? Yeah, I'm taking a lot more risk. We have so let me just share this with everybody too, right? So for folks who haven't been with us, trading futures, we have $56,000. There's 3 of them on, right? There's 3. There's $56,000 in margin on that NQ. There's $40,000 in margin here. So we're using $96,000 of $100,000 that they gave us, right? 100,000. That is not, that's how they set it up, and that's the way they do it. I don't know how they could do it otherwise, but I wouldn't do that. And I wouldn't suggest anybody do that. That would be reckless. But in order to compete for this, we all have the same rules at that point, right? So I'm not going to pass judgment on their game. It's their game. It is a game of sorts, but it can't be gamed otherwise, right? And they got curbs so that nobody can put on more than 10 contracts on any one market. They're governed by the 100, but of course, if somebody jumps out and gets their account to 150, then they can begin to add leverage. And quite frankly, I mean, that's what the hedge funds do, right? We're all thinking about, hey, getting out, getting the profit. They're thinking about stomping on you. I mean, they just want to stomp, and they will keep adding leverage. Another log on the fire. That's not what we teach. That wouldn't. Ben knows this, but that wouldn't be the responsible thing. The responsible thing in general is you have your account size, whatever your account size is. In general, we like to think that you first got to consider the loss side of the equation. Everyone wants to think about the money. I want to make $1,000 a day. or whatever that is. I want to make $100 a day. I want to make $500 a day. I want to make, $10,000, whatever it is. You have to be prepared. If that's the amount of money that you want to make on a given day, then you have to realize that you may lose that amount of money on a given day. Completely automated. Do you ever make manual trades? Yes, Keiko, I'll answer that in a minute. Good question. And I'll show you how and why, what the thought process was here too. But just to finish a brief discussion, and it's brief, we go into more detail during the Q school about, trading in proportion and proper use of margin, and there's a few exceptions here, but for the most part, we don't want to be risking more than 1 to 1.5% of our account value on any one trade, ideally. So because let's just take it for example. Let's say you have a $5,000 in your account. You can get a mini contract on there. You can get a mini contract in there. They'll let you do it intraday between the hours of 9 and 4. You can get it in there. But if you lose $500 on the NQ using a mini, you lose 10% of your trading capital. That's not good, right? That's not good. So what do? Well, you got a couple of choices. One, put more money in so that you're not under the gun. Also, two, if you don't have the original capital, not the intraday buying power, but original capital, you're going to have to get out by 4, or they're going to close you out and put you on a margin call if you don't have that capital to go overnight, because they don't want to assume that risk. So that's also something to consider. But the other thing is what is good, which wasn't available to us when we started, is you can scale down. You can scale down and you can use micros. The process that we teach is the same, and it should be the same. You just have to, trade within yourself. Just answer a question. So Parker is one of our members, and he's in the live Zoom. And he's just note today was shooting fish in a barrel. It really was, wasn't it? It really was. I'm a little disappointed in what we did, but and I'll explain for the benefit of these guys have already heard it, our members. What we did last night. I'll walk you through our thought process here and I'll share with you what we're doing. We may have some folks, I don't think we have any, maybe we do, they're playing the CME. I hope you win. It makes it a little interesting. We don't have to compete day in and day out. So I kind of like doing it, but, so you kind of have to work it backwards, from your account size. You can have 100,000, so this is over leverage, right? I shouldn't be risking here on this account. If we had 100,000, and we were trading it responsibly, I shouldn't be risking more than $1,000 to $1,500 on an individual trade. And I should not be using more, even though they'll give me the rope. I really don't want, I don't want to use more than 50% of that capital. I actually don't, I really don't want to use more than 30%. I'd rather you only use, 25, 25% of the available margin. And I'd like to have the firepower to, not to have to come out. That would be responsible. That would be the right thing to do. And I think we'd have a very comfortable week, but I wouldn't win because they're not doing that, so they are encouraging. I don't know how they would police it. I don't know how they would do it. I'm not going to, critique, the CME for doing it, but yeah, they actually encourage, well, they try, they got some education. They talk about stops and stuff, but it's not, you're not rewarded for, for that. So I hope that makes sense. So what did we do? How did we set out last night? Well, and then I'm going to answer Keiko's question here too. So we said last night, I came in on the swing machine and I looked at the VIX on a daily basis, right? This is what we do every night. And the VIX on a daily, you can see it was up here at 90. Short time ago, it was in euphoria. And then I also looked at, we'll go to the NASDAQ. We'll put this on a daily. I'll do this one here on a daily basis. I want to make sure I know where I am. I felt as though I knew where I was. And the NASDAQ was actually in panic. It was at 90, but it wasn't quite in panic. And then the Russell was in panic and in a sense stepped out, but it was in there. So I opened last night thinking I don't want to be short overnight and wake up to a bloody mess. So I have a choice. I can either, trade a little bit last night, then I'm going to go to bed. I can't set up this. I got to put the trades on the CME. I can't set up any robotics there because it's not connected by an API or anything. So I have to do it manually, and I am going to have to sleep. It's just me. Susan's not, she's doing her thing. But so we traded last night, and we got ourselves at I think it was about midnight, 12:30. So when I went to bed, and we were, the number one position, he was up like 5 or 6 grand, and we were up, 3 grand or so. So we were like in number 20, but that's nothing. It's so very early. So now I get a decision to make. And this was the decision. I can flatten out, and then get up early. Do I get up at 3? Do I get up at 4? Because my concern was not that they were going to sell it down, but I really thought that they might jam it early in the morning at 3 or 4. But exactly when, and I don't want to be staying up making excuses, but I don't want to stay up overnight. I do stay up sometimes overnight, but not usually for my own money, but I really don't want to be doing it right now for early in the week for this. So I'm just telling you what we thought went through. So I said, okay, well, I can flatten out, play it and see what I got in the morning. I don't want to go short, or I can, let it run. The swing machine started to sell down. I had a view of it on my phone. So if I rolled over, I could see it. I had a private view on YouTube so I could look at the phone occasionally. And I thought, shit, I could see it selling down. But, and of course, what does it do? She craps out. And now we're suffering a draw. The guy in Japan, the people, maybe better market hours, they're on it. So, they were on it probably both directions. And what's aggravating about it is because the other thought process was if they don't run it at 3 or 4 in the morning, they're going to probably take it down in the morning, panic everybody out. We discussed it. Our members are here now. They can hear this. We were discussing that. And, the consensus was that, yeah, they're probably going to run it. So that's where, it's like shooting fish in a barrel. But I was already committed, because I stayed with it last night. So it was going to be one or the other. And we're still going to try to stay with this. I'm trying not to over trade it. So that's what we did. And that's where we are. As far as the challenge goes, the Russell's not helping us with much of anything right now. I still think it's a little overdone. But what we would like to do is not trade too much with that so we don't have to work so hard. And if we can get ourselves into the top 10 come Thursday for the last day, then I will stay up overnight as best I can. It'll be dependent on the volatility. And then I'll trade more actively to try to, get us in the top 3 if we even can. If I'm not in the top 10, I'm not even going to do that because I won't be able to catch them. So does that make sense? But I do want to explain that, and so no, this is not something that this isn't something we teach. This isn't something that, I'm giving you some insight on how we chose these. And by the way, our members know this, and Ben's here on YouTube, and Ben's a monthly member, and I think it was August, and the ES contract was in euphoria, and the VIX was in panic. So, and everything was right with the world. And we were saying, guys, and we did, we might want to get some options. We use options. We might want to go out to the end of October and play on the dark side when the S&P was trading at over 4,600. Now, that option, that put option in August for about this time in late October was going to, if you play the S&P cash, the big boy, it was $6,500. Now, we don't have any, right? We closed them all. We didn't get all this. We got a chunk, but we didn't get all this. But if you did, if you had gotten the put in August at 4,600 and you still had it today, you're going to have roughly netted somewhere between 35 and 40 grand on a $6,500 trade. And that's where it came from. We were saying this morning, and this is always the case, when you go to do something with these options, like in August, everything is right with the world and you're going against the other way. Right now, the VIX is in euphoria. The S&P on a daily basis is in panic. The world's going to hell in a handbasket, right? Write it down. Write it down. Write down your concerns. Write down what you're thinking at the time. Write down these numbers. The likelihood is, it's a likelihood. It's not a guarantee. So please don't trade this, right? I'm not a trading guru. I'm actually very, very mechanical. And I let the machine and this do present it. I just do. I don't want to have an opinion. So I'm not giving you an opinion, but the likelihood is that we're going to be higher, in about 20, 30 days. And it could be the first part of December, and CNBC is going to be talking about a Santa Claus rally. And you're going to remember saying, I remember I was talking to that guy, not talking to that guy. I was listening to that guy, and we were trading at 4,260 and we're trading at, 4,450 or 4,500, some dang thing. On a daily basis, with everything that's going on, I really think that the market should be a hell of a lot more spooked than it is. And it isn't. It isn't. It isn't. It just isn't. It's up there, but it's not, it isn't. So any case, I hope that makes sense. Now, Keiko, is it because the SMC Swing Machine Plus removes the emotion, so not a panic decision, completely automated? Do you ever make manual trades entry, or do you just use automation? Okay, so that's a really great question. And, I've drawn this out before, so I won't draw it out, but there are 4 styles to trade. This is for everybody. If, we've given this a lot of thought. It's a great question. So the first box that everyone falls into is the same box that we fell into. And that is the box of being a discretionary trader. What is a discretionary trader? A discretionary trader is trading what they think, what they hear, what they see. And there's very good, and we think we're pretty good. There are very good, excellent discretionary traders, and you should have good discretionary trading skills. You should. And we can help people hone that. The problem with discretionary trading is it's very, very difficult to do day in, day out, and on a more active basis. So what can happen is you can have a person who's a very good discretionary trader and is a great stock picker, and he goes from taking a small amount of money to building it to a large, and he's got a job, and he's doing it all. And then suddenly you think, hey, I'm really, really good, and I'm going to quit the job and I'm going to do this full time. And suddenly he's not doing well. And it's just that discretionary trading is difficult day in and day out. So what ends up happening, they then look for a guru, and I'm not a guru, right? Not a guru. So now they don't have the confidence. Their confidence gets hurt. They start looking for someone else who can give them something. And what that something is that now they're giving the other person, what they see, what they think, what they hear, and they start trading from that. And it works a little bit, maybe it doesn't. but they live in that box of discretionary trading, and usually they die in that box, and then there's somebody else coming in. It's amazing. And Wall Street doesn't care. It marches on. The firms don't care. They just don't. And so what we do is, for the person who's really, really serious about this, who really wants to do this, full time, we have something called the Q School. It takes about 3 weeks. And I can answer questions, but I won't right now. I won't go there. But and and we're trying to move them from mechanical trading to, I'm sorry, from discretionary trading toward mechanical trading, Keiko. And that, as an example, is what is mechanical trading. It would be following something like swing machine, right? Because if, we just look at some of these trades on the 1 minute, if you took the NQ long 156 minutes ago, yeah, you're up $3,500, but there's a skill set involved here. Swing machine isn't the only tool we have. We have over 70 tools. And embedded in all of these tools are all kinds of options. So there's just a multitude, more opportunity, more options than a person could use in a year. You wouldn't want to use them all. You'd want to, pick and choose what works best for you. So that is and we do use charts though, right? So we like this radar, right? But we do use charts. You see in a little chart image here, but we use price charts versus time charts, but we do use charts, right? So trading from here is like trading under the hood or flying a plane under the hood, and then when you use a chart in conjunction, it's like being able to see the horizon, look out the window, right? A lot easier for sure. But still no guarantees. But then once you get real comfortable doing the mechanical trading and keeping score, then we try to move you, Keiko, into the realm of robotic trading. What is that? Well, robotic trading is, yes, the machine can start putting trades in and out. Now, not all brokerage firms will let you do that, right? They don't. TradeStation will. You gotta authorize it all, and you gotta know what you're doing, and they will let you do it, which is a beautiful thing. Now, just because you have a robot that can buy and sell, do not think that you can jump the shark. Do not think that you don't have to be a good discretionary trader. Do not think that you don't have to have mechanical skills. That would be a very bad assumption. You must. Just use the pilot analogy. You may be able to afford a plane. You may be able to, fly a little bit, but you may not be able to, to fly with instruments, right? You may not have that instrument rating. So you got to have that, there isn't a rating here, but you got to have that time. You got to give yourself that time. The robot, Keiko, can put them in and put them out automatically. But the other thing that it can do, it can just, which is a great way to go. And I have them running. I have them running on another screen, and they're presenting trades. I'm not taking them because I didn't want to trade that actively on this CME site, because it takes a few seconds for it to go, and I just can't. It's just not going to be fast enough. So we're taking a slower look right now. But you can do it with with what they call without confirmation or with confirmation. So without confirmation, it's just going to put them in and out. If you do it with confirmation, then you can agree or not agree to put the trades in. So it's really a neat way to go. But even if the machine puts it in, I could go up there and capture that $5,400. I'm not going to, but I could. So you can interact. And then the last box is what we call robotic hedging. And so that's using machinery, and you can still trade it mechanically, but you start to hedge. Why do you hedge? Well, You're hedging to make maximum use of your capital and to smooth out your account value. If you are trading options, and we have folks that are, call us and tell us they're trading options, and they're only buying calls and buying puts, and primarily only buying calls. Well, they're not really trading options, because, option traders, the best ones, they're hedging all the time, with their spreads. Your probability of profit goes way up. You don't make as much, but your probability of profit goes way up. So hedging can maximize your capital and smooth out your account. And that's basically what we're doing. Long answer or short answer to a big question. So I hope I helped there. So any case, did I answer that, Kiko? So we're gonna, the plan is we just, we're gonna have some oscillations. I just got to, we got a little unfortunate. I guess it would have made more sense that they were going to gap it down. And we mentioned it, we talked about it. But I can tell, like, the guy in Japan who's number one, like, he has stopped trading, so he's sleeping now. His account hasn't moved, and he's probably just sitting on it. And we got a long way to go here. But the number 9 position is up 20 grand, and if he's not, he might be on his game, maybe not. We don't know. I do recognize a couple of names from other contests. So some of these people, and it could be university groups, right? It could be a bunch of students, that, are good and have their own programs, and they're taking shifts, and, they want to, earn some bear money, So it's just me. And they have traded, I've only traded, I only got three trades logged. And right now we're ranked 243. So not terribly good, but we'll just sit tight. The top guy, he's traded supposedly 30 times. So any case. Thanks, Ben, for the question, though. I hope, Ben, I answered it. Yeah, I know you know that, I think. Oh, I should put these back. So on a daily basis, they're short, but we want to see if we can get on this hourly here and get it to cooperate. So it's still rising, still hasn't gone long yet, right? So, if we can get a run on the hour, I mean, as you can see here, 97 hours, it was up almost 10 grand. If we can get a vicious run on the hour, and this is showing just one mini, we get 10,000. I got 3 of them up here. We got, 30 grand, and we got these, and the small caps can get going too. We would, I felt as though by Thursday, the top 10 are going to be somewhere north of 50 grand. It looks like they're going to be doing better than that, but I would have thought, somewhere around 50 to 70,000 on 100,000 accounts. So we got a long ways to go. Now, some of, for the benefit of those coming through, what are some of the options that you can, that you, and the tagline to our website, it's more than just the tagline. It's learn to trade your game, not mine, not Susan's, not someone else's. I'm not trading your money. I'm not suggesting you do anything. I'm not at all. You can take the education and run with it, or you can, take the tools as well and set them up and do what you want to do. Yeah, hedging. We talk about it, Keiko, in terms of delta neutral. So this is what it looks like and why you do it. See if I can draw this out. I think of it like a teeter-totter as a kid, a seesaw, right? When you buy anything, I can't do it freehand. So let me back up. I do it this way. Think of it as like a teeter-totter, a seesaw, or let me get a marker here. Draw this. Here we go. Okay, so we got a teeter-totter, right? Seesaw. So when you buy a stock, could be anything. Let's go fatten this thing up a little bit. And if you buy it right here, at the money, at the moment you buy it, the delta when you buy the stock right at the price is 50-50. The stock could go up and the stock could go down. Your probability of profit is 50-50, right? Right there, 50-50. Of course, you and me both, when you buy, you want your stock to go up and the other side to go down and you make a ton of money, right? That's what you want. But sometimes it don't work out that way. Sometimes as soon as you buy it, it goes the other way and it goes down drastically and the other side goes up and the stock goes down. You're like, oh crap, I'm out. So your account volatility and your account's going up and down and it's very volatile, right? Well, if we can structure something, let me back this up. If we can go long, if we go long something, meaning we buy it, and then maybe through another product, but let's just play along, and we sell something, short something, the exact same thing, we are delta neutral. We're not going to make any money because if this goes up, this side goes down. If this goes down, that goes up. So we're delta neutral. We just won't make any money. So you start with that. But what if you buy something here and then over here, you short that same something, you short it, but you don't use as much leverage, or maybe you don't use as much time. You just, you still want it to go long. You still have a bias to the long side, but you've given yourself a hedge to soften the blow if you get it wrong. And what you're trying to do is you're trying to, rather than making a real steep bank, if you think about this, like if this is an airplane and you got the wings and the wings are nice and level, you're trying to make I'm sorry, we'll do it the other way. We want the thing to go up, so I don't confuse anybody. We're trying to make a more gradual turn, right? So if this one goes up, yep, this one's going to go down, but not as much. And so your account value will be more smooth. And we do it certainly for emotions and all of that. But once you get beyond all that, it doesn't really, once you embrace, professional trading and really getting to be a pro, I'm not talking Robin Hood shit, but the emotions will go away. You will have done it so many times, the emotions will induce, I think, subside. They have to. And, but we really do it to maximize that capital and to smooth out the account. So you can do this hedging any number of ways. but option traders that do spreads, they're doing them all the time, and they are both long and short, at the same time, but to varying degrees, right? And so then your trading goes from playing chess or checkers, even your option trading, to, playing, well, from checkers to chess, then almost three-dimensional chess. And then we can do that robotically, right? Um, but it takes time. You need somebody to show you, and at least show you how to set it up, and then it's going to take time on your part, to move yourself into a simulated environment and maybe spend 2, 3, 4 weeks, running and vetting things out. If you cannot make money in a simulated environment, you're not going to make money real. You're just not. And so if anybody's telling you otherwise, I would run for the hills, because um, if they're telling you, you're gonna have that sickness in your belly, they're just flat out wrong. You don't want that pilot, that's taking you, into San Francisco at night and in the fog, have a sickness in his belly because, he's only done it once or twice. I hope to God my pilot doesn't have a sickness in his belly, right? So I hope that makes sense. So yeah, if you're totally married to it and you're totally delta neutral, then you're just that, you're delta. But we talk in terms of delta neutral. Okay, so I have to step out of the office for a quick moment. If you got any other questions, let us know, and I'll be back around 1:15. We'll let you watch. Right now, just a check on the leaderboard. Where are we? Oh man. All right, we've improved. We're at 199. All right, 199. Okay. Number 9 is 20,000. We're at 6,000. So that's no big deal. I mean, we could get there. So we're fine. Okay, I'm back. Yeah, Ken. These are my thoughts. So Ken's asking, what am I going to do? Am I going to stay? Am I going to close? Um, the plan is, and when we did have this mapped out, just what I described, right? I have mapped out. I don't want to for the contest. So for the let me just see if we have any folks here on the YouTube too. So all right, so we got a competitor in the contest, Apex Futures Trader. All right, so we'll see we'll see where we are come Friday, right? So my my approach on these things is not to, because we can't automate it and trade it very quickly, you know, is to take a slower approach and to try to get post the number and let the traders, let's see what the other traders have, because some of them may have just played everything, they put everything on red or black and may have got the punch up but they can't sustain it. So that's the plan. That's the plan. I mean, I would be thrilled if we finish, if we could get this up. I think I got enough leverage on that we could be up around 120, 125,000. I think so. And if we do that today at today's close, um, we'll be, in the top 10 or so. That's where it would be. But I'm still going to want to see where we are. Now, right now, the 5 minute on the ES, that's actually 5 minute. But I want to see if the 60 minute can get long on the hour. And if that's the case, then we're going to be here, we're going to be here for a while, maybe even into tomorrow afternoon, maybe into Wednesday. So I'm just going to let it play out and see, that's the plan. But I don't want to start actively trading it because it's just too much work without having the machine until, the last 24 hours. That's the plan. So where are we? We are currently ranked. We're at 137, right? We're at 137. Number 9 is at 20. He's up 24,000. We're up 10. We're up a little bit better than what we got on here. So that's where we be. But we're just going to wait. I don't like to if I can just say, Ken, I don't, whether we're doing this trading in sim, trading real bread, I just try to stay at the moment. Now, when you're trading when a person's trading the real bread, you need to stay focused on what it is you're doing, right? We're not trying to come in. I have the firepower, the personal firepower, the personal leverage to come in and to, really punch the markets. I choose not to do that. And I just want to extract a cash flow, a comfortable goal. It's a personal goal. It doesn't have to be anyone else's, but we have, plenty of firepower to do that, more than enough, and just come in and get that done and leave, right? CME challenge something a little bit different. But so you just stay with your plan, stay with your your trading approach. So makes sense. And yeah, don't so don't let this distract you. Don't let it take you off. Don't ever let this, and now I'm talking to our members that are here on the Zoom every day, always saying, don't let us, whatever it is we're doing, take you away from what is working for you. So you got to get into the zone, into your silo, and stay with it. Okay, so I just want to let the folks know on YouTube, thanks for stopping by. At the bottom of the hour, we're going to have to sign off on YouTube and get focused in on what we're doing, and we're doing a lot of things. We're doing our own trading, we're doing the CME, and we're also doing some work for the folks on at Stock Market Caddy. So we wish you the best, and if you have any last minute questions, feel free, and we'll try to give you an update as the week goes on. No promises as to what time or when. We'll just see where we are. We'll certainly give you an update at the end of the week for sure. Have a great one, everyone. Any questions, let us know.